Hey guys, it's Jeff Trapp here with the Tax Planning Pros and the Jeff Trapp Podcast, and I'm so glad that you decided to join me today. It is April. Spring is in full bloom. It's starting to heat up across the United States. We've got many people that have gone on spring break or going on spring break, and we're rocking and rolling and headed right into summer. And if you've seen the stock market lately or this year, we've hit all-time record highs. We're hitting all-time record highs if you own any digital assets such as cryptocurrency, Bitcoin, NFTs, all the things out there are just rocking and rolling along. And today I want to talk to you about those digital assets because there was a law passed back in 2021 that stated that, hey, we need to regulate cryptocurrency and the reporting of digital assets. And the IRS and Congress have kind of kicked the can on this for a while, but beginning on January 1st, 2025, there's going to be some new regulations that you need to be aware of. And they've passed a 280-page publication on what these proposed regulations are going to look like. So if you are a digital asset broker, if you're thinking, things like Coinbase, decentralized exchanges such as Uniswap and DYDX, DIDX, I believe is how you say it, that enables buyers and sellers to execute cryptocurrency transactions. If you have a platform that provides custodial wallet services, um, operators and owners of digital asset kiosks, those who regularly offer redeem digital assets issued by them, such as stablecoin issuers, and real estate brokers and other middlemen, such as title companies and lawyers involved in real estate transactions where digital assets are used as payment, these transactions are going to need to be reported to the IRS. And just much like if you sell stocks through like a Morgan Stanley or Charles Schwab or a Merrill Lynch and you get a 1099B every year, you're going to be getting a 1099 report outlining these transactions in 2026 for your 2025 tax year. And this will be the form 1099-DA. Brokers do not have to do anything for 2023 or 2024, but in 2025, it's going to get much harder to hide those digital assets transactions. And what are you going to see on these forms, right? You're going to see, the date the transaction occurred, you're going to see whether it was a short-term or long-term transaction. You're going to see the cost basis for these transactions, and you're going to see the proceeds received from these transactions. And then, of course, the gain or the loss on these transactions. So it's super important, for 2023 and 2024, you're going to probably have to calculate these things manually, maybe using an Excel spreadsheet. If you have cryptocurrency through a brokerage like a TD Ameritrade, a Charles Schwab, or a Merrill Lynch, they will typically track these things for you. But if not, those transactions, when you buy, sell, or swap, are considered capital gains transactions, and you're required to report those on your tax return. And I know I've got people that are invested in cryptocurrency, and they have a very, very hard time keeping track of this stuff. So the reporting rules are scheduled to go in effect in 2 stages. For the 2025 tax year, brokers must report the gross proceeds of the digital asset sales. For 2026 and later, brokers must report the adjusted basis and whether any gains or losses are short-term or long-term. And then keep in mind for 2023 and 2024, brokers do not have to report anything. So it's the world is changing. And as Bitcoin cryptocurrency continue to become more mainstream, there will continue to be more regulations regarding these digital assets. And keep in mind, right now, if you do have digital assets, you do have to check a box on your tax return stating that you have cryptocurrency. So if you check that box and say yes, the IRS is going to want to see those transactions listed on your Schedule D for capital gains and losses. So if you have questions about this, I highly recommend that you reach out to your tax strategist, your tax advisor to help you manage this information. So you report it correctly so you don't get on the IRS's radar as being somebody who's doing something wrong. And of course, if you need help, feel free to reach out to us at the Tax Planning Pros if you don't have a tax strategist. And as always, down below in our show notes, we've got our free tax playbook to help you guys save money on taxes year after year. And if you know anyone who has digital assets, please forward this episode onto them. Please like, share, and subscribe, as that really helps us out. Once again, I'm Jeff Trapp with the Tax Planning Pros, and thanks for joining me today on the Jeff Trapp Podcast.